Welcome, Benzinga Nation. In today's world of trading options, we have a great guest lined up for you today in Rob Hocking, who is a Senior Vice President and Head of Product Innovations at Cboe Global Markets. Rob, welcome to the show.
Awesome. Thanks for having me. Excited to be here.
You know, I'm always excited to talk about options, and there's a lot of things happening in this world. So let's kind of, for the folks that might not be familiar with it, give us a brief overview of what Cboe does.
Sure. Yeah. Cboe is the world's go-to derivatives and exchange network. We provide trading solutions and products in multiple asset classes across North America, Europe, Asia Pacific, including equity, derivatives, FX, and digital assets. We're continually focused on delivering really cutting edge trading, clearing, investment solutions that drive value to our customers. And we do that through the lens of innovation, with the goal of providing these solutions and products really anytime, any day to every customer to help them navigate, any market environment that they might come into.
Now, you mentioned, the clearing aspect of it, because Cboe has been an innovator in investment products. But what have been some of the most successful ones that you've seen? And what did their introduction kind of add to the market in terms of value to the traders and investors?
Oh, it's a great question. And for this one, I kind of like to take almost a little trip down memory lane. Cboe has a long history of bringing firsts to market. When it comes to what are some of the most successful things, things that pop to mind. Obviously, first marketplace to list options, period. 1973, it started at Cboe. The first to introduce options on broad-based stock indices. We were the first to introduce leap options, flex options, weekly options. And then, of course, we introduced volatility as a tradable asset class with our VIX franchise. So when I think some of the most recent innovations, like you mentioned, that have had an outsized impact, I really think, probably first and foremost, I think about the expansion of our existing product suite when we added Tuesday and Thursday options to SPX back in April of what it had been 2022. This really changed how the market could manage risk around particular events and introduced that really short dated optionality that the market has really gravitated towards. Like, just to give the audience some stats, SPX options trade around 3 million contracts a day. And of that, we've been ranging between, call it 45 to 50% of that options that expire on the day, on that same day. So think today, options that expire today, people basically start a trade and expire a trade on the same day. And that's had a massive, massive impact to the market.
Yeah, let's just say my trading activity may or may not have gone up when you introduced Tuesdays and Thursdays options trading activity there. Okay, well, you can't talk about innovation and not bring this topic up. You've got options that are planned to launch on October 14th on VIX Futures. What are you looking forward to with this launch?
That's right. Well, obviously, like the VIX complex as a whole, we're excited to continually keep expanding it. And so we have a number of things in the last few years on the index front. So we introduced credit vol indices off the VIX methodology. We introduced the one-day VIX, which caught a lot of headlines when we did that, kind of centered on that short-dated trading like we talked about. And then most recently, we introduced VIX TLT, that is a measure using the VIX measurement on Treasury vol, kind of helping you compare equity to Treasury vol markets. Now we're going into the tradable product and expanding that franchise more to, like you said, options on VIX Futures. These are neat. It introduces a completely new part of the risk curve for us in the VIX complex. Options, the way they work on the security side, you can't run daily settlements. So we basically settle options through an auction process in SPX, and that happens once a week on Wednesdays. But there's been demand for shorter dated, more regular expiries in VIX. And so by introducing an option that settles into a future, we can run daily settlements. And this will allow us to introduce effectively a daily option on VIX that settles each day into the underlying future. So it gives you more of that short dated access to the curve and just kind of a new risk to trade as part of that bigger VIX complex.
Okay, so we talked about what's coming up on October 14th. With so many things happening, though, in the options world, what would you say is the number one thing that someone should consider when trading options? Like, what should they understand pretty much?
Well, here, let me turn that around to you and ask you a quick question. Do you trade options currently?
Oh, absolutely. 100%. Yes.
So when you were getting into that, did you have any fear? Were you nervous? Like, what was that first step in that process?
Yeah, I think, as I took the shorter dated options and I saw the stock price maybe move 10 cents, but then my contracts moved by, say, a dollar perhaps, that was a bit of a learning curve. Then you have to learn about the Greeks, and you have to kind of really understand what is under the hood of the vehicle that is options and what is impacting the price, whether it's theta, whether it's time, whether it's delta, whether it's a movement in the stock. So it's a whole university of itself.
And you
Did I just answer your question for you?
You did. You just nailed it. It's great. That's what I was hoping for. It's that. It's exactly that. It's that risk reward payouts. It's customers understanding the ins and outs of when you lose, like if you buy an option, you can only lose the premium you pay. If you're short an option, you have unlimited risk. It's going into these characteristics and really understanding the risk reward payouts that you have. I know when I first started getting into options, I had to chart everything. It was basically charting payoff diagrams. So you could visually see, okay, if the underlying goes here, this is this is where my risk exists. And I think, number one thing that people need to consider are those exact things, is really understanding the nature of when the underlying market moves, how does your position adjust, that derivative aspect. And then it's about, getting comfortable with different sizes, different products, different risk exposures. We have a number of things. You mentioned SPX. Obviously, we've been looking at and we've been working at building out that complex. So you have things like nanos that have a 1 multiplier, a very small product that you can effectively not risk a ton of capital, but get your introduction to options with. We have the XSP, which is the mini SPX, and that kind of tracks the same size as the Spider ETF contract. And then we got obviously the big contract in SPX. And that you're tracking, obviously the bigger, little bit more institutional product has a much bigger notional, but we keep trying to build out the product set so that in tandem with education, people can get more and more comfortable using options and then can get more and more comfortable kind of ramping up their use of options.
You mentioned charting. I may or may not chart options sometimes. I may be that nerdy with it. There's also tax advantages, which again, might be a conversation for another day as well. But let me wrap this conversation up about what are you most excited to see in the coming years in the market as well? Any trends that you're seeing that folks should keep an eye out for?
Yeah, obviously options usage as a whole has been on the rise. Volumes, massive increases over the last few years. And I think it's smart, right? Investors are learning how to define their outcome through the use of options. And so I'm excited to see that continue. Overwriting is becoming a very, very big, I would say theme that we're seeing in the market, whether it's people going in and actually selling upside calls against their underlying long portfolio, or whether it's using ETFs that do that for you, kind of in a managed solution. It's just the overall learning, and I'll say it again, it's that idea of defining your outcome. When options were introduced, I think a lot of people are nervous about them. They think risk, they think high volatility. What do I need to be, afraid of? And actually the introduction of options was designed around the opposite. It was designed around removing volatility from your portfolio. It was, designed around defining your outcome and giving you more certainty in your investment. And so I think more and more people are realizing that. We're getting more and more eyes, more and more, tweets, messages, what have you. Everybody is starting to get a buzz around options usage. And I think that's really going to drive volumes in the future. And it's exciting to see.
Look, this was a great conversation. I hope to never sell a naked put because I like to get my beauty sleep in. But Rob, it's always good to catch up and talk options, man. I appreciate your time.
Absolutely. Thanks for having me.
You got it. That was Rob Hocking, who is a senior vice president and head of product innovation at Cboe Global Markets.